Bill Gates, co-founder of Microsoft, is the ultimate tech icon. You know the name, but did you know he's a successful investor too? Through his charity work, we get special access to Bill Gates' portfolio, where he owns 23 stocks worth $47.7 billion. These are the top 10 stocks Bill Gates is invested in for the long haul, starting with number 10, Fedex. Fedex, or Federal Express, is a $73 billion company that's trading in between its 52-week high and low, down $16 from its 52-week high. Gates is one of 10 super investors who owns the company, and it makes up just under 1% of his portfolio. Historically, Fedex has been a long-term compounder. They've increased more than 300 times from their lows. However, in the last decade, Fedex has more or less kept pace with the market, slightly underperforming. COVID came as a shock to most businesses, but it actually helped Fedex. They added on a lot of debt, but their operating cash flows and sales have gone through the roof. Things are starting to pull back from some of those highs, but they're still generating tons of cash. Fedex doesn't earn the greatest returns in the world, but they are returning capital to shareholders. This comes in the forms of both dividends and share buybacks. Today, FedEx has a 1.85% dividend yield, and they have a 3.81% shareholder yield overall. This includes 9.5% dividend growth in the last year alone. A Guru Focus value for FedEx comes in at $247 per share, which is $50 below their current stock price. With things coming back down for the company, their cash flows are reflecting some downside as well. They give FedEx a fair value of $179 per share. Analysts, however, see things differently and have a rosier picture for the business. They have a $319 target price, giving FedEx a 7% upside. The ninth stock in Bill Gates' portfolio is Coca-Cola FEMSA. The Bill and Melinda Gates Foundation Trust is the biggest owner of this one. It's the $4.5 billion Coke bottler serving Mexico and parts of Latin America. Today, this business is $9 below its 52-week high. This is the smallest company on our list, and even as the biggest single shareholder, it only makes up 1.1% of the portfolio. In total, 3 super investors own Coca-Cola FEMSA. In the last 10 years, the stock had been a big loser until the pandemic. If you had bought at those lows, since then it's up 150%. This is another stock that generates a lot of free cash flow and has benefited from the pandemic. It has a lot of fixed assets, so it doesn't earn very high returns on capital, and it uses a decent amount of debt. The stock has a market-beating dividend yield of 3.65%, where they're returning a lot of this cash to shareholders. They've grown dividends 4 years in a row and grew it by 12.5% last year alone. A GF value comes in at $99 per share, which is still $8 up from their current stock price. Analysts are even more bullish on the business with a $112 price target. That's a 23% upside from today's prices. Walmart's the 8th stock in Bill Gates' portfolio. It's the $648 billion retail giant that today looks like its stock price fell off a cliff. This, however, was from a stock split, and in reality, it's trading for its all-time highs. Gates has 1.3% of his portfolio invested in Walmart, and 4 super investors own the business in total. Historically, Walmart had been a huge stock in the portfolio of Warren Buffett, one of Bill Gates' closest friends. Buffett, however, exited most of his stake in the business in 2016 and was totally out of Walmart by 2018. Today, Walmart's trading at its highs, and it's been one of the all-time great American companies. Since going public, a single share of Walmart is up almost 8,000 times. Again, Walmart fits the pattern of some of these other businesses. Walmart's a blue-chip, slow, steady, stable stock that generates a lot of cash. Compared to the other companies we've looked at, they also earn better returns, though they certainly have more competition from the likes of Amazon and other big retailing giants. Walmart also returns a lot of capital to shareholders both through dividends and share buybacks. In fact, Walmart is a dividend king. They've grown their dividends 51 years in a row and pay just a 1% dividend yield today, though they did grow this by 9% last year alone. Despite these attractive qualities, it looks like the market's well recognizing this in Walmart. They're trading way higher than they have historically. A GF value for the stock is only $57 per share. That's down 38% from their current stock price. The numbers don't lie here either, with a $52 fair value based on their cash flows, implying a 34% downside. Analysts take a very different view, with 35 of them saying Walmart is a buy, with an $81 target price. Ecolab is Bill Gates' next stock, with 5 super investors owning the company today and it making up 2.6% of his portfolio. Ecolab is the leading commercial cleaning and sanitation company, and it has a $70 billion market cap today. This is trading almost at its all-time highs. Again, no surprise, this is an ingrained business that's been a long-term compounder throughout its history. Recently, though, it's just had about average market performance. The business didn't quite see the boost that you would have expected during COVID, but it's still a stable, steady company that generates a lot of cash flow. They again have a lot of fixed assets, and the big thing to consider is that they added a lot of debt during the pandemic. Again, they don't earn very high returns on capital either. This is another stock that's trading way above its historical multiples, and today a GF value comes in at just $201 per share. That says their stock price could fall by as much as 24% to get back to its fair value. Ecolab's cash flows support an even sharper downside, down 50% with a current fair value of $125 per share. No surprise, analysts are still seeing a rosy picture with this company and a $271 target price. Stock number 6 is John Deere. Deere Company is a $105 billion agricultural and heavy equipment manufacturer that's trading near its all-time highs. The stock is owned by 6 super investors in total, and Bill Gates isn't the biggest. He has a 2.8% holding, but the Oakmark Select Fund has a 5% position. Compared to the other stocks we've looked at, Deere Company has performed much better, especially since the pandemic. They're up more than 455% from their lows in the past decade. Since the global financial crisis, the stock is up nearly 15 times. John Deere's really seen a boost in its business across the board since the pandemic. Its sales, earnings, and cash flows are all up. The company's even earning high returns on capital for the first time in over a decade. This also comes with capital returns to shareholders. They bought back more than 5% of their shares last year alone. Additionally, the company pays a 1.5% dividend yield, giving them a pretty attractive 7.2% shareholder yield overall. Despite that, the stock's current earnings are out ahead of where the company's traded in the past and their ability to generate cash flows. This could potentially be a warning sign, especially if their earnings and cash flows don't about even out over time. It looks like the market's betting that this company is going to come back to earth with a $387 Guru Focus value, and it looks like there's some implied downside in the coming years for the business based on analyst estimates. Before we get to Bill Gates' top 5 stocks, if you're enjoying the video, you can get even more fair value estimates absolutely for free over on our Patreon. If you want to support Global Value, do so there or become a channel member to help make more videos like this one. Caterpillar is the 5th stock in Bill Gates' portfolio, and he has a 5% holding in the business. Only Gates and Tom Gaynor from Markel, who has a 1% position, own the stock. Again, this is a heavy equipment manufacturer that has a $168 billion market cap, though it operates in different segments than John Deere. Like Deere Company, Caterpillar has performed very well in the past decade. This adds to their historical performance, and they've really taken off since the early 90s. In the past few years, they've posted record high profits, and they have a ton of free cash flow and net income. Like Deere, they've earned high returns for the last 5 years. Also, like that company, they're buying back a lot of shares, decreasing their share count by about 3% each year for the past decade. Caterpillar is a dividend aristocrat, paying a 1.6% dividend yield, growing this in 31 years in a row, and having an 8.4% dividend growth last year alone. This adds up to a 5.3% shareholder yield. So far, we're seeing a lot of high shareholder yields in Gates' portfolio. Again, Caterpillar trades out ahead of where it has historically and its ability to generate cash flow. They're posting record profit margins and all-time high earnings. Can this continue? It seems like the question's maybe, but not at the same pace. Today, a GF value comes in at $300 per share, implying around an 18% downside. The numbers don't lie, and the cash flows are even more negative, with a $246 fair value and a 30% downside. Like always, analysts want to see things climb higher with a $394 target price and an 11.5% upside. Canadian National Railway is stock number 4 in Bill Gates' portfolio, and here it makes up 13.5% of his portfolio. This is further diversification across North America in industries with heavy amounts of assets. Fund managers Chris Hone and John Armitage also have 11.5% and 5% positions respectively. Canadian National Railway is a $72 billion Class 1 railway giant. Today, it's trading in between its 52-week high and low. After posting stellar performance since the global financial crisis, in the last decade, the company has underperformed the market. The business is very steady and very stable, but they've added on quite a bit of debt in the past decade. This is the first stock on our list that earns regulated, though above average returns. Speaking of returns, they're returning a lot of capital to shareholders in the form of dividends and share buybacks. They've reduced their share count dramatically from 856 million in 2012 down to 643 million today. On top of this, they pay a 2.12% dividend yield and have a 6.3% shareholder yield overall. The company's trading right at its historical sales, but that's far up from its cash flows. Its cash flows are saying there's a 21% downside and only a $94 fair value. Again here, same old story with analysts, they see an 8% upside. The third biggest stock owned by Bill Gates is Waste Management. He's one of just two super investors in the company with a 16% position. The other is a 3% position from Jensen Investment Management, which they slightly trimmed this quarter. Waste Management is the $80 billion garbage and recycling giant that's trading $20 below its 52-week high. It echoes this asset-heavy theme we're seeing in Bill Gates' stocks, and in the last decade, it's outperformed the market. That outperformance comes with the company trading at 30 times earnings today, though it is a steady and performant company, increasing both its revenues, earnings, and free cash flows over this time. They also earn just slightly better than average returns. It fits the mold of these stocks exactly, with the company buying back a lot of shares, especially in the last 8 years or so. And on top of these share buybacks, Waste Management is a dividend growth stock. They have a 1.5% dividend yield that they grew by 7% last year and have grown 20 years in a row. The price evaluations are going to be hard to overcome here, with Waste Management stock trading way ahead of where it has in its history. Still, it seems the market loves the predictable nature of this business, and a GF value comes in at $190 per share, just $13 below their current stock price. I mentioned earlier that Bill Gates is longtime friends with Warren Buffett, and Buffett's company, Berkshire Hathaway, is his second largest position. 19 super investors own the B shares today. This is led by Guy Spear, who has 22% of his portfolio, followed closely by Gates, who has 21% of his portfolio invested in the company. These shares are part of what the Bill and Melinda Gates Foundation Trust received through the giving pledge from Warren Buffett. He's been donating 4.5% of his shares every year since 2006, though he announced this year that he's cutting that off due to growing foundational fees. Instead, his money's going to go to philanthropies run by his kids. Since announcing the B shares in 1996, Berkshire stock is up more than 20%, and it's trading just 5% off its all-time highs. Berkshire A shares are the stock market's best performer in the past 50 years. With the number of businesses Berkshire owns, it's hard to make out much just looking at their numbers. The thing we can see is that their sales and cash flows have steadily marched upward. Also, since the pandemic, Buffett's bought back a lot of Berkshire shares, though that has stopped recently. While it's clear Buffett doesn't think the company's too undervalued, a fair value could still be higher than today's stock price at $456 based on the numbers. The top stock in Bill Gates' portfolio shouldn't come as a surprise. It's the company he co-founded, and it's Microsoft. The Bill and Melinda Gates Foundation is the biggest absolute and relative owner of Microsoft, with 33% of their portfolio and $16 billion invested in the company. Microsoft's the world's second biggest company at a $3.1 trillion market cap. Today, it trades $30 below its all-time highs. Again, in its history, it's one of the all-time best performing stocks. It's up more than 20 times alone since the global financial crisis, and it's crushed the market in the past decade. This is reflected in their numbers, which look like they peaked in the early 2010s. Then from around 2016 on, they've steadily marched upward. To put it in perspective, Microsoft made $74 billion in free cash flow last year. That's massive. They also earned pretty high returns on capital, and until last year, they were buying back a lot of shares. That, though, has stopped. Microsoft's another dividend growth stock, paying just a small 0.77% dividend yield today, but growing this by 10% last year and 19 years in a row. Like the other companies on our list, it looks like Microsoft's valuations are stretched. These are out ahead of their historical sales, earnings, or free cash flow numbers. Still, the market recognizes Microsoft for what it is, a wonderful business. They want to see it steadily march upward, and today it has a GF value of $410 per share. Analysts are even more bullish with a 13% upside and a $493 target price. Now, these are the top stocks Bill Gates owns in his portfolio. Which of them is your favorite and what surprised you most? Let me know in the comments below.